Hey guys, welcome back to Smart Trader, and today we are going to continue our price action concepts. So if you are a new viewer and you have not watched our old videos of price actions, then you can go and check our playlist where you have a lot of basic videos on price actions, and I'll be adding these also in that playlist. So any day you're looking into these videos, you can check out the playlist so you don't miss out the order of learning. So today we'll be talking one more pattern, that is bull and bear flag pattern, nothing but a bullish or a bearish flag pattern. Okay, now this price action is that it's a trader's creativity how you look into the charts. So the prices move, right, and it's the trader's creativity to create formations, and he should know the logic behind this formation. By just by drawing flag, just by drawing any head and shoulders, there is no advantage. You should know the logic behind it. Why you should know the logic behind it? Because when this breakout happens, what happens? Does it goes up? Is this pattern a bullish upside? Is this pattern a bearish downside? What other traders are going to do here? Then only you can take advantage. So you should know the logic behind these patterns. So that's the reason people learn price actions. So if you know price actions, you can also, whenever you've come across these formations, you can also take advantage up to where is your stop loss, all that you will get to know if you know the logic behind it. So we'll be teaching the logics behind it, and it depends on your practice how you apply in the real market. Also, I will try to show you one example of a stock where a bullish pattern had been formed and a breakout happened, and how you could have taken advantage. Just an example I'll just show you. Okay, the first one is the bull flag pattern. Okay, so one is the bear and bull. So bull is nothing but going up, bear is nothing but going down. Keep this in your mind. Now we will go by the logic and the theory. So when the prices are in uptrend, a bullish flag pattern shows a slow consolidation lower after the aggressive uptrend. So they are saying that the prices are going up, if you see here, and a consolidation takes place here. Okay, a slow consolidation takes here to the lower side, right? So this is the upside, and then this is the lower side. This indicates that there is more buying pressure. See, this is a buying pressure moving the prices up than down, and indicates that the momentum will continue upward. Okay, so too many buying pressure, supply and demand, like I say, too much of demand, so it is getting pushed up. Traders wait for the price to break above the resistance of the consolidation after this pattern is formed to enter into the market. So this is nothing but what? This is the consolidation, right? So once this consolidation breaks out, let's say here, traders take an entry. That's what they are trying to say here. See, now there are two types of traders. One can be the active traders and one can be the reactive traders. See, like you told in this definition, like what we saw, once the breakout happens, a lot of traders enter here. Okay, but there are a lot of active traders also, okay, who will try to take positions in these levels, below this flag levels. They try to take an entry, okay, in with the hope that it breaks out, that they are taking risk over there. But there are reactive traders, only after a breakout, a confirmation of breakout is happening, strong breakout, then only they will enter in such a way that how much ever the flag has gone, let's say 10 rupees flag, this is the pole. Okay, this is the pole, this is the flag. So pole has around 10 rupees roughly. From here to here, if I calculate, 10 rupees is there. They try to take advantage 10 rupees or 9 rupees based on the pole. They will try to take their target. Now when they take an entry here, what is the stop loss? They keep the stop loss as this. Okay, this support level. Okay, this consolidation level is there, right? This range, the lower levels, they keep that as their stop loss. So if I can clear this and draw, so here this is going to be the stop loss, and this is going to be the entry for them, and the target may be somewhere here, because the pole had shown so much of 10 rupees. So they are going to consider around 9-10 rupees based on their skills. They will keep their target and stop loss. If things go wrong, a breakout happened and then it goes down, a stop loss is hit here, right? A SLS kept here, so they try to take advantage here. Okay, so this is one way how a bullish flag pattern is done. So the flag pattern is bullish upside. I'll show you one example. So this is an example of Tata Power, and Tata Power on a one-day chart, if you see here, if my creativity says, okay, this is a flag, almost it is going a little bit lower in this particular range only, not breaking much, and this was a strong uptrend which went up, I would say this as my pole. Once this breakout has done, it is crossed above this one day is trading above this level, maybe I may take an entry from here in such a way that, let's say from here 142 to 172, let's say 30 rupees, I will book 180 to 210 rupees, I may book my target here. Okay, and if you see, these type of price action patterns occurs in a lot of stocks, and this happens mostly in a bullish trend. Okay, and it breaks out, and depends number of people trading and a lot of price action traders taking advantage. They have taken advantage, and that's what you would have seen. I also have a position in Tata Power, and that's how 30 to 40% the holdings have gone to 30 to 40% because of the recent days move only. Okay, because of these breakouts. So like this, if you know what others are gonna do, if you know that a lot of traders are gonna enter here, you will know you should enter here. What if you're short here? So you should know a pattern and the logic behind the pattern. So you may find this pattern in a stock also, or in a cryptocurrency also, right? So this price action can be applied on any chart, because if traders are following these type of logics, you should know the logic and try to take advantage. You can see a lot of them after coming up here, they have booked their profits, and the journey continues because the market is going up and the stock is going up also. Here the market is so bullish that the stocks are also breaking easily. In general scenario, maybe profit booking can take place and go down also. Okay, this is just an example for you guys, live example in the month of October, how we got a bullish flag pattern on Tata Power. So now what is the bear flag pattern? Nothing but it is the reverse, the ulta version of it, right? So the diagram is ulta. If you see here, a downtrend is there and slowly an uptrend. So I can tell, see, downtrend is there, slowly an uptrend continues, creating a consolidation level here, and then it breaks this level. If you see here, it breaks this level, and maybe how much, let's say 10 rupees was the pull, 10 rupees is the target, and here was the entry. Right, here was the entry, here was the stop loss in case things go wrong. From here again it goes up, right? So when the prices are in downtrend, a bearish flag pattern shows a slow consolidation higher after aggressive downtrend. So this was the aggressive downtrend. If I clear, this is an aggressive downtrend, and then a consolidation level going upside, and now this level has been broken out. This indicates that there is more selling pressure. You see here, more selling pressure moving the prices down rather than up, and indicates that the momentum will continue in downtrend. Traders wait for price to break below the support of the consolidation after this pattern is formed to enter the short position. See, this is the support, right? So let's say this is support. For this consolidation level, this is the resistance, this is the support. The support broke here, the entry was here, right? So this is what they are trying to say. Now again, there may be aggressive traders who may keep taking positions in this, because this is being the resistance level. They may slowly take positions in these levels with the hope that it will break and they'll get all that advantage. Again, it is risky. Reactive traders, once the price action breakout is confirmed, if I can again clear this, okay, so price action breakout is confirmed, then the traders take their position, and they know that the advantage is still here, so that they will try to book their profits partially or fully here, and few may continue holding. So these are the logics of this bullish and bearish flag pattern. So if you find this pattern, you should know what is the logic, basically how people are going to take advantage, how you can scalp, how you can hold. You should also know. That's the reason I wanted to share this particular pattern, price action pattern, with you guys. So do let me know if you want to know any other price action pattern, or I will continue with my concepts what I have written for you guys. So thank you so much. Hit that like and subscribe button. See you soon with one more learning video. Till then, take care, stay safe.